So we have heard such an enormous amount here at FII about the investment landscape that we have before us as we round out this year. Higher rates, slower growth, risk from disruption due to the war in Ukraine, conflict here in the Middle East. Money is moving out of public markets into private markets, and a newer generation of investors is investing with purpose alongside profit. I am very excited to be on stage with two brilliant minds who are funding transformative change around the world. We've got next to me Heather Henyon, founding partner of Mindshift Capital, which is a global venture fund that invests exclusively in early-stage, women-led technology companies. Also delighted to have here on stage Edie Rubenstein, who's co-founder and CEO of Manna Partners, also a limited partner in the $70 billion Alaska Permanent Fund, which is the largest sovereign wealth fund in the United States. So, welcome. So, I'd love to hear, first of all, about the people who give you their money to invest. I'm going to hear that from both of you. Heather, tell me about those limited partners in your fund. Sure. Oh, we need to get Heather's mic on. Try again.
Does that work?
Yeah,
okay,
on you go.
So I've been investing in women-led technology companies now for about 10 years, primarily first as a very active angel investor. And Mindshift was really the formation of an institutional fund. We've got 70% of our LPs are female, but 70% of our capital comes from men. And we are inclusive, so we want to include everyone in investing in this opportunity because of the financial returns first and foremost, and then obviously getting more capital to women is part of our mission as well.
What about you, Edie? Who gives you their hard-earned money?
We went the untraditional path. One of the things we were looking at was obviously less than 2% of money goes into female managers, but we did not want to be venture. So we looked every step of the way of what needed to be disruptive within private equity. So we built a niche sector firm focused on food, proving out food could be an asset class. But more importantly, we looked at how do you build a product that could work within families and sovereign wealth funds, and especially multi-gen. And one of the things I was most proud of is while 40% of our investor base is women, most of those were first-time ever private equity investors. So we were actually teaching them fund investing and then teaching them co-investment. That's not normally what you would do, but we're really happy that we were finding ways to bring new forms of capital into the space.
Now, it's not been an easy time to raise money, and you've decided on a rather punchy strategy, I'd call it. What have you done?
Look, so we've raised close to $700 million across 2 funds and 5 co-investment vehicles. And as an emerging manager, that's pretty good without a track record. One of the things we have done is looking in the era of GP stakes is saying, how can we thank our LPs? And so we're working on something right now with some of our key LP partners, many of which from this region, that would allow some of these women to be able to come into our GP. And I think that's something that Manna is really known for, is creating new institutional grade products that allow families to feel like they still have the power in something they may have made their money in, such as food.
So tell me, Heather, about some of the people you are investing in and why you have the specific gender lens for your investments.
Right, so we're a gender lens venture capital fund, which is a somewhat new term. I always describe it and compare it to Islamic investing, where we've got a screen at the top of the funnel. So just like you would have a Sharia screen in Islamic, we have a gender screen. Beyond that, everything else we do is just like best-in-class venture capital firms. We look for top founders, teams, problem, scalability, big market, and 10x return. Our theory of change is that by creating more women-led investment firms, similar to Edie, that we are actually going to change the other side of the table, where female founders in the US receive about 2% of capital, which has been the same data point for the last 10 years.
Does that make you angry?
Well, not really anymore, because I think I've come to accept it, and I've moved on, and now I'm just focused on changing it.
What about you? Yes, and I feel like we can't go fast enough. Yeah. And so that did lead me to be willing to serve on the Alaska Permanent Fund board, where we're actually $80 billion, and we're unveiling, and my baby has been our $100 billion strategic plan that we will hit over the next 3 to 5 years. So we're unveiling that next week, and I felt like while I may have a last name known in private equity, there wasn't a big enough platform to show people why diverse managers could actually outperform. And so if you are the only female on the largest sovereign wealth fund board in the US, and you start telling people we need to allocate more to diverse managers or niche sectors where they're not represented by some of these larger funds, I felt like maybe I would be doing my part to move the needle. I can't build Manna Tree fast enough to be able to change this, but I will also say what made a lot of Manna Tree's success was a lot of women CIOs and wealth managers. They've been very helpful. And then oddly, it's a pretty collaborative world. When you meet another another GP like yourself, you get so excited because there's about 5 of us.
Well, we're called an endangered species because there's so few of us, but yeah.
Right, we can't have you guys go anywhere. Well, Ellie, since you mentioned the Sovereign Wealth Fund, tell me the story behind this headline. Alaska's Sovereign Wealth Fund decides to decrease its private equity investment to 15% for fiscal year 25, down from an initial 19% outlined in a 5-year plan from 2020. Tell me what's behind that headline. Is it wrong?
Look, I didn't seek out being on the board of the permanent fund. I actually got a call from our governor in Alaska 15 months ago telling me that he hears I'm running around the world, quote unquote, feeding the Middle East. And I said, well, yeah, they understand food security. They import 95% of their food, just like we do in Alaska. He said, great, can you help me? So I ended up building him his Office of Food Security. And through that, he really saw what the tools of private partnership and sophisticated private equity could do. So he asked me to go on the permanent fund board. I said, okay, but I'm not sure a government agency is going to like my view of the private markets. The two don't work at the same pace. And so I went on. I'm the first woman ever to be vice chair, let alone the only professional investor on the board in history. And
Alaska isn't known for its investment professionals?
there was one day we were in executive committee and there were like 12 men. And while I love men and I really love working with the boards, they're all politicians. And so I have to remind them that we're there to maximize financial returns, not to make the legislature mad. But it's been a very interesting dichotomy and I love them. They ask me every day if I wake up and think of changing statutes, and I say, no, I wake up and read the markets.
Right.
So we work hand in hand. But to your point, I felt like I actually could prove to my investors who are wondering what I was doing at the permanent fund that I was a fiduciary when they lowered private equity with me on the board. Boy, was my father not impressed. But there's a story behind that I think many sovereigns go through, which is our head of private equity, who really had built out the portfolio of the last decade, had left, and we needed to reshape the team, and more importantly, in this environment, figure out what we're doing. Now, the headline that didn't get picked up on that was they handed our CIO a $5 billion tactical opportunities bucket. And a lot of that was we knew what was going on with private equity wouldn't maybe fit the better investments we were seeing. You guys would probably love to hear this, but he publicly said, and we are definitely a state that does not have an ESG mandate, that if he were going to put capital work today, it would be in direct oil and gas investments. And I think that Alaska has actually been one of the few global institutions willing to put money into oil and gas investments. And so that was a big reason why we handed him the tactical opportunities, because traditionally private equity had been asset allocators or co-investors with management. But I will tell you that it's going to change, and I urge you all, we will finally be in the $100 billion club when we unveil this, and the only way to pull that off will be to increase private equity. So I won my battle with the CIO.
All right, excellent. We'll be watching out for that. So let's focus on some of your investments as well. You both have allocations within protein. Heather, what are you doing and why did you choose those?
So we focus on what we call the rise of the zillennial as our fund thesis, and basically Gen Z, millennial consumers that have very different values from traditional generations. We see massive disruption across traditional business models, and especially in certain sectors, food tech, fintech, ed tech, health and wellness tech. In food tech, we've invested so far in 2 cultivated meats company. One is called Orbillion, which is led by an Austrian female founder based in California, in Alameda, in Silicon Valley. And then the other one is led by Sandhya Sriram, Shiok Meats in Singapore. So in the crustacean space, whereas Orbillion is focused on red meats. So we did that because we also believe that given the shift towards longevity, people living north of 100 years by, 2050, and just the big changes that we're seeing, that there was this opportunity how do we feed people? I think to Ellie's point, with 10 billion people on the planet, we're going to need new sources of food. So this idea of creating meat in labs from cell biopsies of animals and being able to grow at a much faster scale in a more sustainable way was very appealing to Mindshift.
What about your protein, Ellie?
We're the opposite. We hate that category.
Why?
We hate venture capital. We don't take consumer adoption risk. And I'm Alaskan. Manna Tree was started because I hunted and fished all my own food. There are many of our investors in the audience, and I remember proudly showing them all my hunting pictures or my fishing pictures of how I understood the food supply chain. And what we will tell you is, from an institutional standpoint of allocating capital, 98% of consumers today still eat meat, 97% still eat dairy. And our best performing companies in our portfolio are the meat and dairy companies. Now, within that, they are definitely category leaders or creators of something called regenerative agriculture. So they're better for the environment. They've cut out the feedstock, so nobody's worried about a commodity input. And the consumers still, we were talking about this, the fastest growing category of consumers is what we would call permissible indulgence.
I love that.
I don't know about you guys, but I don't want to eat a kale salad 3 times a day. I actually want to go to a sports game and enjoy my nachos and have clean meat on there, but I'm happy to have, better for you sour cream and some better for you beef there. And we are seeing those trends continue to play out and really drive the returns in our portfolio.
Do you want to come back on that, just on the real meat versus the cultured meat?
Well, yeah, I think we probably have different data points. so we see a big shift, even towards health and wellness, and because of that, people are eating differently. There's lots of debate over, is it healthy with processed plant-based proteins? I myself have been vegetarian almost all my life. My family, my sons are all vegetarian. And we see this generation, kids who have grown up in historically very meat-focused cultures and families, they actually are choosing to be vegetarian, some vegan. If we look at dairy, gluten-free, the food is making us sick.
Yeah.
And we see massive increases. 1 in 3 people will get cancer during their lifetime. So if we can try to solve that, I think that there's massive, upside for the...
I'm one of those 1 in 3, and after I had cancer, I became very interested in the gut biome. So tell us, Ellie, about your investments there.
So look, the themes you're talking about are real, and in Manna Tree, we represent the spectrum. We have people that have diabetic children. We have plant-based. We definitely represent the spectrum. What I will say is consistent is what we would call clean ingredient. People don't want ultra-highly processed food. Now, if they're going to feed their kids beef, they do want it to be healthy.
Right.
But I think some of our companies that are really innovative, and actually sectors I don't yet see here that are intriguing to me, such as kombucha, okay? So kombucha is taking sales away both from alcohol and from soda. And why that's good is it's a fermented beverage, and so it's good for the gut. Now, most of our team has had some sort of a personal health episode. I will say same with our investors. But what you will see is, sadly in the US, 88% of consumers are metabolically unhealthy. Yet 88% of consumers today, the number one driver of purchases is, will it make me healthy when they're looking? It's actually not the environment. And so there's this massive, empowerment of consumer health, and people are doing that via food. Even in an inflationary world, all of our companies, their top lines grew. That's exciting. Now, how do you actually access those sectors? What Manna Tree, while we were known as a food supply chain firm or human health and nutrition, the best way we can now simplify it to all of you is brand and infrastructure. We know that there are these brands that people absolutely love, but more importantly, we have the infrastructure and manufacturing to do the allergy-friendly processing. It's not easy to actually do this at scale, and sadly, a lot of these healthy food brands were manufactured in the same plants where there's a lot of unhealthy food, and consumers don't really want to see that. So that's what we've gotten really good at, is being in late-stage growth, which by nature is a shorter hold period, but more importantly, these companies are really vertically integrated, and that matters to the consumer. But on your health point, look, I have serious health issues. That's pretty much known across our investor base. As somebody with a compromised gut, and this is very relatable to this population, 9 out of 10 babies today in the US are born without something called B. infantis, which they believe may be what makes the gut not healthy and could lead to obesity and diabetes. The number one cause of that is C-section birth or antibiotic use in mothers. Yeah. And that's a problem. It's not like my mother wanted to do that, but she didn't know. So we've been going into this category. I've been board chair of a company called Infinite Health, and we really believe within food, one of the best categories where you may see biotech-like returns is the gut.
Interesting. We're going to have to leave the audience wanting more because our time is up. But Heather and Ellie, let's see if we can convince the organizers to get us back to continue this conversation next year. Next up, we've got philanthropy for impact with Elnie, so stay with us.